Cyber risk and liability is probably the fastest growing, if not even the biggest absolute risk that any business has. In fact, an article that came out today says a major cyber attack could cost the economy $3.5 trillion. Unheard of. So if that's the case, if it's that risky and it could be that expensive, why isn't it selling? Why isn't cyber insurance, cyber liability insurance not selling? Why isn't it the most common, fastest selling type of insurance there is? Everybody has fire insurance and liability insurance and business owners insurance. Why is there not cyber insurance coverage? A lot of it has to do with claims experience and loss experience, where everybody's familiar with losses from lawsuits or slip and fall or E&O insurance or professional liability insurance. People know somebody who has had that kind of loss. In some cases, it's required to carry that kind of insurance for contracts. The loss experience for cyber, even though it's more common individually, doesn't go back as far. It's only been 2 or 3 or 5 years, depending on your industry, where cyber losses or cyber attacks have happened on a regular basis. They're happening more frequently than other types of losses, but because most people haven't been personally aware of them, it doesn't quite become top of mind. So let's look at some data and some information about how much these can cost. So here's an example of the type of a claim that could happen from a cyber attack. So in this case, hypothetical scenario, paving company, guy goes out to dinner and he gets into his Uber and he realizes that his company had a cyber attack. This is on a Friday night right before a weekend. And in order to take care of that loss, you have to do a bunch of things. First of all, you have to do an incident investigation. You have to have some type of technical evaluation of what happened. That can cost tens of thousands, if not hundreds of thousands. These numbers come from an actual claim, by the way. Then you have to do crisis management. So you have to maybe call in legal. You have to call in consultants to take care of dealing with clients, dealing with vendors. PCI is going to be your coverage for private information for consumers. You're probably going to have to pay some fines and penalties if your customer's information was released. You may have to pay the ransomware. In this case, the ransom hackers requested $350,000 because of the fact they had coverage. They had an incident response team that stepped in from the insurance company. In this case, it happened to be Chubb, that negotiated it down to $240,000. Then you have to go through the process of restoring all your data. That can cost hundreds of thousands of dollars for high-end technical and administrative people. And last but not least, your business will be interrupted. You may lose some sales. You may waive some accounts receivable. Altogether, it costs about $1 million, which is about average for a typical cyber hack. Now, as we've talked about before, when a business has this type of a loss, 60% of the time they have to go out of business. They go bankrupt, right? So having coverage might help. So let's take a look at another list of the things that come with some cyber policies. This, again, has to do with Chubb. Not all cyber policies are created equal. Some have more or less coverage. So you want to make sure that you have third-party coverage. So if somebody hacks into your network and gets into somebody else's network, that person can sue you, or that company can sue you. You want to have coverage for that. You want to have business interruption, so if you're shut down or even if you're slowed down for some period of time, it covers that. You want reimbursement for your ransom payments. You want to have also subrogation waiver, meaning that if, for example, some of the liability or the cause of your loss had to do with another company, or if you caused damage to another company and they sue you, you can say, well, you were part of the problem too. You also want to make sure that you have broad descriptions of what is considered a loss. Some policies very narrowly construe what would be considered a loss or not. You also have a claims made form, meaning that if you report it, it's covered as long as it happened during the policy period or before. Sometimes you have to make the claim during the policy period, so that if you don't have coverage anymore, or if you didn't have coverage before, you're not covered even if your policy is in force at the time it's discovered. One big difference from some carriers is excess and surplus lines versus admitted carriers. Admitted carriers are licensed in the state where the domicile of the insured is. Others are excess and surplus lines, meaning they're not on admitted claim form. So you want to check with your agent about what that means and what's an advantage of one versus another. Again, this is just a marketing piece from one insurance carrier, which is Chubb. They're a great carrier, but it's used to compare different policies from one to another. These are the kind of things you want to check into for having a policy selected. If you need more information about evaluating your business to see how safe it is for cyber attacks or what coverages might be available, you can check out our website, riskcoverage.com. You can see on the screen some more information about the company along with the phone number. We'd be glad to be of assistance. You can even arrange for a consultation for your cyber coverage. It's expected that within the next 5 to 7 years, cyber policies will be the primary coverage that a business will have. The other coverages will be secondary, but cyber policies will be the most prominent because it's the most likely and also the biggest risk to a company in terms of frequency, probability, and also the amount of loss per claim.